Hey guys, I got a comment to do a video on why small caps in theory benefit from an interest rate cut. So I thought it was good to do a refresher on this. I have done a couple of videos in the past, but it's time to talk about this again because a lot of people think, oh, if an interest rate cut happens, that means the economy is slowing down and we're going towards a recession. But remember, in normal cases, maybe that would happen. But remember, we have an AI boom going on right now, which is a once in a generation thing, bigger than the dot-com boom. And that's why we are not going to go into a recession. So as soon as investors get that in their head, they'll realize they should be in stocks. So this is the dip right now. I said the big caps, while they may trade sideways for a while, this is the time to dollar cost average because they will bounce back with an interest rate cut as well. I do think the small caps will go up more and outperform since they've been left for dead pretty much. They've been left behind for many years, and the small caps actually have better earnings growth than the S&P 500, okay? And they're trading at a lower valuation, okay? But the reason why small caps benefit in theory from an interest rate cut is because number one, there's an AI boom going on, okay? If you look in history, I know it's not always the case when an interest rate cut happens that stocks go up, right? But with the AI boom, that's why it's different this time, that it can continue to go up. And small caps, number one, their valuations go down when an interest rate cut happens because it's more of a risk on market at that point. And also there's more economic activity when interest rate cuts go down. That's the main thing to understand is think about someone that owns a home, right? They're locked in at their 3% rate. Why would they want to move when they have to pay 7%, right, to go somewhere else? But when interest rates start falling, that gives them that reason to finally make the move. And that's where we'll see more homes for sale. Okay, and the supply and demand will come more in balance, even though I think supply will still remain low for the most part. But that's going to help, the real estate stocks, okay, the mortgage REITs, okay, I mentioned Annaly, NLY, and then Opendoor, okay, those are in the real estate sector. And then you have, think about car purchases, right? Obviously, with auto loans going down, more people are going to go out and buy cars that they've been waiting on. So who's in auto loans and HELOCs, which again are tied to home equity lines of credit? Upstart. Who's also in personal loans? Upstart, right? Obviously, people take out more loans when rates go down. So it just spurs more economic activity. And the nice thing is when interest rates go down, these small companies that usually have to tap the markets at these higher interest rates, now they're tapping them at a lower interest rate. So in theory, they're saving money, and that money goes to their bottom line, their earnings per share, which helps the stock go up, okay, and valuations go down. So that's why, guys, small companies, these small cap stocks are having their moment right now. They're catching up. A lot of them are just starting to use AI to have more efficient operations where they're cutting labor costs, right, while also increasing revenue growth. And that's why with these low valuations now, this is the catch-up trade. It's happening right now as we speak, as we go into an interest rate cut. If it gets pushed back a month, you can't let that bother you. Just keep holding until the interest rate cut eventually happens, and you're going to make some money, guys. So that's why, again, if you're wondering why the small caps, why people are saying they're going to benefit from an interest rate cut, and why Tom Lee is harping on being in the IWM and thinks it can go up 40% over the next 10 weeks. That's why, guys.